Well, absolutely. Let's see how that pans out. But now let's shift focus to the earnings space then. Now, Eicher Motors has reported a rather mixed set of numbers in the fourth quarter. Profit rose a little over 27% compared to last year to 1,360 crore rupees, handily beating street expectations. Meanwhile, the revenue managed to meet estimates. However, disappointment came in on the margin front. Now, the auto company saw margin shrink to 24% from 26.5% earlier. Now, my colleague Srishti is joining in us with all the details and the fine print of those numbers.
Well, it's been a mixed bag from Eicher Motors this time around. While when it comes to revenue, the number has come in line to what we were expecting at TT now, 5,241 crores. EBITDA marginally below, and especially the margins, 24% is what the company has clocked in. And there's a miss coming in from the Royal Enfield margins as well, because the standalone margin stands at 24.7%, that bit lower than what the street was penciling in. And even the consolidated margins as well, if we see, then that is also lower versus the street estimate. The profit has actually managed to surprise us a bit. 1,362 crores is what the company has clocked in, better than what we were expecting, and believe that because of the higher other income, that is one of the key contributors. Higher share from VECV also contributed in the numbers. Other than that, what's key to note is that the EBITDA per vehicle has now dipped to a 8-quarter low despite the live high quarterly volume. So especially the margins are taking a hit for Royal Enfield as well as Eicher Motors on consolidated basis, and hence we say that there has been a bit of a miss on the margin figure. But yes, indeed, the profit figure is above the our estimate as well. So we would call it a mixed bag coming in from Eicher Motors.
Let's also go across and listen in what management had to say post their mixed set of Q4 earnings. Let's listen in.
I think, EV, our Tata's Royal Enfield's take on EV is through the Flying Flea, which is an endorsed brand. This is the brand which blends for city plus conditions, lightweight. That's the initial thought with which we will be entering. That's what is the platform which we are working on. As I mentioned, there are two products, which is C6 and a Scrambler take, which is S6. Both these products are very different products which are going to come in the Q4 of FY 23-26. It's only a starting. It can lend itself to the various form factors which we will keep looking at for the city plus. We are not at this stage envisaging to be a separate subsidiary or a separate business unit or something like that. It is part of the Royal Enfield, and there is a dedicated team of almost about 250 people who are working only on the electric, which is our Flying Flea to start as of now. So our Flying Flea, the endorsed brand of Royal Enfield, our focus will be making urban-focused city electric two-wheeler for the future, which is timeless yet modern technology and design, which is embedded into the motorcycle. That is what is our Flying Flea thought.
For us, it is, from a production perspective, it is business as usual, and we would expect to catch up on those lost dispatches in the coming weeks. In terms of demand, at this point in time, no major change in the demand environment there at this point in time. The new prices will be going in soon, and that is when we'll be in a position to read the demand situation better. Having said that, given it's in the premium luxury segment, I do expect the demand to be far more resilient compared to a more mass kind of manufacturing OEM. And therefore, I remain optimistic on the demand, even in the US. There's still a lot of details awaited in terms of whether those tariffs are now waived for parts and accessories. Is it available from a retrospective effect from April 3rd when the tariffs first came on board? How exactly is going to get implemented is unclear. So I think until we get further details on that, it's going to be very difficult. And these are all, every day is a cost that you would have. And therefore, it's important that we get a hang of what those dates are. And the numbers can move materially, so we would rather wait for that before we put it out. Second factor, I think, similarly, we need to see a tariff deal happening between EU as well as US. EU-US deal as well, because you've got our Defenders and Discoveries being made there in the Slovakia plant. So that's why I'm hopeful that will also come through. So I think there's a lot of moving parts as far as JLR is concerned. Domestically, I think things are much more stable compared to what we see in the international markets. Here, if you notice, commercial vehicle we have delivered despite a decline in revenues. We held our shares and at the same time improved our profitability. And that journey will continue. We would want to see us stepping up on the market shares as well, particularly in the small commercial vehicle business. But that's the only area where we should have done a better job than what we have done last year. So with that, I think the commercial vehicle business will be on a fine fettle as well. And on the passenger vehicle side, I think this is a year of consolidation and our market shares have stabilized. Our product offensive starts now with the launch of the Harrier EV. Then we have the Sierra coming in. The Altroz has just been relaunched. The Punch mid-cycle refresh is coming through. So a lot of product actions are coming through. And that should also help us get back to the share increase journey that we've been on to for the last 4 years. So it's a quite a full plate that we have. So the actions are all happening. But to translate that into numbers, and this is what will be the numbers here, it's just that the externalities are simply too confusing for us at this point in time to be able to distill it out and hold ourselves accountable to that. But the fact that we'll focus on growth, the fact that we'll focus on investment, that doesn't change. And that means we'll need to be very tight on our cost, very tight on our cash. And that is something we'll do.
All right, then that was the Tata Motors management on the roadmap ahead for growth. But now moving on, as we are, penciling in a start above the 24,700 level for the Nifty, Gaurav is standing by to tell us about all the stocks that should be on your radar today. Good morning, Gaurav. What's on your list?
First, let's talk about IRDA because the company has now filed a plea against Gensol, and this is filed under the insolvency code worth 510 crore rupees. Other than that, Vodafone is also going to be in focus because company has said that they will be launching 5G services in Delhi NCR, and they are going to expand these services in across 17 circles by August 2025. Wipro is also going to be in focus because company has announced a digital transformation partnership with Hatchet UK. With this, they will be helping the company to modernize their IT infrastructure. Other than that, Tata Power is also in focus today. First of all, a mixed set of numbers is what we saw from the company, and other than that, company has said that they will be bidding for the Discom privatization in Uttar Pradesh, and in FY26 they see that the capex will reach around 25,000 crore rupees. Now let's not forget that for FY25 the capex level is at around 16,000 crore rupees. Muthoot Finance is also in focus today. A good set of numbers is what we saw from the company, and other than that, board said that they will be opening around 115 branches in FY26. And when we talk about the commentary, what we have picked from the commentary is that the RBI said that the rising gold price is actually a red flag for the institutes, and other than that, what they're saying is that RBI is unsure if the new players are following norms. So definitely watching out on these comments as well. Other than that, let's also not forget about Aadhar Housing Finance because the lock-in period ends today. Around 35% of the shares will end its lock-in period. And lastly, let's also focus on some of the counters on the back of the earnings. So we have Jubilant Foodworks, Piramal Pharma, who actually reported very good set of numbers. Other than that, when we talk about Tata Power, Torrent Power and Brigade, we saw a mixed set of numbers was penciled in Q4 FY25. And lastly, let's also not forget about Kirloskar Oil and Karnataka Bank, where we saw a weak set of number in this quarter. So definitely watching out on all these companies on the back of the news flow as well as numbers today.
Thanks, Gaurav, for that update. Now it's